Joining us now is Ed Morse, Citigroup's global head of commodities research. Ed, great to have you on. What do you attribute this weakness to?
Well, the weakness is based on flows that are de minimis. We don't see very much in the way of open interest. Open interest is about at 10 to 13-year lows, in fact. So very limited amount of move of managed money can have a very big impact on prices. A lot of people think it has to do with what's happening with the debt ceiling. I don't see that as a causal connection. I think there are a bunch of other things happening. We've had very weak demand growth year to date globally, weaker in China than expected, weaker in the U.S. than expected. We had kind of a very disappointing Memorial Day weekend when people do whatever they can and looking at mobility on an instantaneous database. I think that on the mobility side, on the one hand, and the chatter about an OPEC meeting coming up this coming weekend is what really has done it. And doubts that are in the minds of a lot of people now that OPEC plus countries will do anything. So I think those are the two major factors at work: a weaker than expected market and chatter about OPEC having said they might do something, but probably not.
Do you believe that OPEC's going to do something? I know there's all these concerns about Russia oversupply, and you've got that country essentially trying to produce and export as much as it can to offset the economic blow that's happened there. But then we know the Saudis have been wanting to tighten and keep prices elevated. So is this really a sit on your hands, do nothing, OPEC plus type of meeting, or could we be surprised?
Well, remember that it's not all of OPEC plus. It's only really 9 countries altogether who are part of this agreement. It's all a voluntary agreement. There will not be 9 members in favor of a further cut. That's almost a guarantee. The question is who might cut and for what reason. And I think the reason will be where prices are when it comes to this weekend, where prices are when it comes to the close on Friday. If we see WTI at the $60 range and Brent getting closer to 69 than to 75, I really think that there is the likelihood of an incremental cut taken by at least 4 of the 9 countries that were taking part in the cut that was scheduled for May. But Russia probably is not one of them.
Ed, was there an expectation that Memorial Day travel would be even stronger than it was, or is this in any way reflective of expected demand slowdown in the second half with all this recession talk looming?
No, I don't think the second half had to do with it. It really was. We had a significant build of inventory globally with high-frequency data, more than 20 million barrels worth in the first 2 weeks of May. And then for the last couple of weeks, we've seen really significant drawdowns of U.S. inventories, including gasoline. So people were thinking that this was an indication that that we were seeing the driving season that was really reappearing before Memorial Day. The one doubt about it is the degree to which refiners were, putting oil into retail outlets in anticipation of Memorial Day. But the high-frequency data were much more disappointing than the flurry that we had for a couple of weeks about how U.S. gasoline demand is really looking good for the first time in a long time.
Ed, very, very quickly, you got some permitting reforms, maybe not as ambitious as expected. You got a pipeline poised to be approved with this debt ceiling deal. I realize it might not happen overnight, but how positive is that for something like, say, nat gas?
Well, the nat gas issue is that would be positive in a longer-term period of time. Nat gas is kind of trapped at the moment. Yes, we've seen drilling coming off, but not off enough to keep us from keeping on producing more. Industrial demand is down, and the likelihood of us reaching tank top, so to speak, by the end of the injection season is looking high. We have reports about weather conditions with lower than normal temperatures, with a lower probability of a big hurricane season, with El Nino effects happening in the market. So the signs are that it's going to be a weak natural gas season coming up this summer.